Thank you for joining us. It's Business Nigeria. Here are the top stories for today. NNPC records $1.21 billion deficit in 6 months over project funding as all firms borrowing from banks hits 5.93 trillion naira in June. Europe's energy troubles hunt euro as our Asian shares drop. Well, on the interview segment today, two robust conversations as usual. First, we'll start with conversations around Nigeria's capital market. We will analyze issues around unclaimed dividends, illegal trading activities affecting the growth and development of the capital market. And on the flip side of the show, the ongoing crisis rocking Nigeria's aviation industry. Let's understand the impact of the hike in the price of Jet A1 fuel on passengers and, of course, airline operators, amongst other burning issues affecting the aviation space globally. Welcome to the show. Let's start with news making headlines across the world of business. The Nigerian National Petroleum Company Limited recorded a project funding underperformance of $1.2 billion between January and June this year. Well, that's according to a recent data from the national oil firm. While the monthly forecast for cost recovery and funding of government priority projects was $536 million, the total projected spending for the purpose for the whole of 2022 was pegged at $3.21 billion. However, the NNPC L data showed that in the first 6 months of this year, the company defaulted in its projection for the period by $1.216 billion. In 2021, the company posted a deficit of more than $2.6 billion for cost recovery and priority projects, although it budgeted about $5.8 billion for the purpose. In the meantime, figures obtained again from the NNPCL shows that 6 international oil companies are to remit about 442.37 billion naira in August 2022, being proceeds from the sale of domestic crude in May 2022. The NNPC Limited explained that 422.37 billion naira was for 8.887 million barrels of oil for May 2022 domestic crude payable in August 2022, adding that the 6 companies were joint venture partners of the National Oil Company. The National Oil Company stated that the remittances was for the May 2022 domestic crude oil payable in August 2022 by NNPC in line with the 90 days payment terms. The NNPC Limited makes remittances from crude oil sales to Federation accounts, which are shared by the 3 tiers of government monthly. However, it has not been able to make remittances since the year due to the humongous amount it spends on subsidy on premium motor spirit. And staying with the sector, latest data from the Central Bank of Nigeria reveals that the combined bank borrowings to the oil firms operating in the downstream and upstream sector of the oil and gas industry was about 5.93 trillion naira as of June 2022. While operators in the downstream natural gas and crude oil refining subsector owe the banks 4.28 trillion naira, operators in the upstream and services subsectors were indebted to the bank to the tune of 1.65 trillion naira. This shows an increase of 250 billion naira from the total debt of 5.68 trillion naira in December 2021. Recall that the Petroleum and Natural Gas Senior Staff Association of Nigeria had in March raised the alarm over the huge loss incurred by operators in the oil and gas industry as a result of vandalism and oil theft. The president of Pengasan, Mr. Festus Osifo, said between October 2022 and February 2022, more than 90% of crude oil pumped into the transnational pipeline by operators was vandalized. Let's get to our first topic of discussion today. The issue of unclaimed dividends has remained on the front burner of public discourse amongst shareholders, the regulator, and of course government since 2017, when the issue of establishing an unclaimed dividend trust fund to remit unclaimed dividends was first proposed in the capital market. This development has over the years remained one of the perennial issues that have continued to rear their heads in the Nigerian capital market, causing a lot of worry among regulatory authorities, company executives, registrars of companies, and general public regarding the rising incidence of unclaimed dividends, currently put at 177 billion naira at the end of 2021. Well, on the other hand, the Securities and Exchange Commission has also described the activities of ponzi schemes as a cancer that is capable of undermining the growth and development of Nigeria's capital market. Well, let's dig deep into this. And to give us insights into this development and other issues, I'm being joined live from our Abuja studios. He's the head of office of the chief economist at the Securities and Exchange Commission, SEC, Mr. Oke Umeano. Thank you so much for your time. It's good to have you on the show.
Thank you, Tolu. It's good to be here.
Yes, I'd like to start with that big story. 177 billion is lying unclaimed dividends, and SEC is worried about this. First, what is your reaction, and what are these things frustrating the actualization of letting people get across or get access to all of these monies?
Like you said, we're worried about the quantum of unclaimed dividends that we have. 177 billion naira is not a small amount, but we are doing what we can to reduce that quantum. That money belongs to Nigerians, belongs to investors in our capital markets, and we would like these people to come forward and claim these monies. A lot of these unclaimed dividends stem from identification problems we had about a decade ago. There was a time when many investors, bought shares in companies using names that weren't theirs. We've since opened a window for these people to come in and claim these shares as long as they can identify, give us a form of identification, and prove ownership. We have also set up an e-dividend payment system, a system that allows people to mandate their accounts so that dividends are paid to them electronically. I mean directly to their account, bank accounts. All Nigerians need to do is identify those companies where they have dividends, approach the registrars, fill the forms that have been provided, and the process just goes on and they get their dividends. And that's what we want. We've been trying our best to create awareness so that owners of these dividends can, get them.
Interesting way to start this discussion. But what other efforts? Because I read through it, and you say some are frustrating the efforts of the commission. What is really happening with regards to that aspect of it?
Okay, so at the CMC, it was mentioned, or the DG noted, that there are some people who are setting up bottlenecks along that system. Like I said, we have a system where people can mandate their accounts and receive their dividends electronically. We are just warning the stakeholders along that system to play their parts. We do not want anyone to constitute a bottleneck. Everybody who is involved, I mean the banks, the registrars, the brokers, anybody who is involved has to do his or her own part to ensure that the system is seamless, it moves fast. People who come to mandate their accounts for e-dividend get those accounts mandated. So that's what we're referring to.
All right, then let's talk a little bit about the role of SEC now. Of course, regulatory and supervision over securities trading. How has it been? Where are we? How well are we doing? Because this will definitely build confidence in our market if it's properly managed.
Okay, securities trading, we haven't done badly. As you know, there are economic headwinds everywhere around the world, Nigeria included. But in this year to date, we haven't done badly. Our markets have done well. The all-share index has returned over 15% this year. The fixed income index, the FMDQ S&P index, has returned about 5%. Commodities about 4%. So I wouldn't say we have done badly this year. The SEC continues to regulate the market to make it a fair place for all. The SEC continues to, protect investors, continues to lay down rules that make our market efficient, make our market a market that anybody can come into and realize their objectives. So I would say that we are doing the much we can, but we're also trying to do better. We're also improving. There's always room for improvement. So, for instance, we are in the process of acquiring a surveillance software that would help us improve our insight on the goings-on in the market. We have partnered with the African Development Bank along those lines. We want to get state-of-the-art equipment that will help us, even improve our ability to regulate the market. Also, we have a bill presently that has passed the second reading at the House of Representatives, the ISB, the Investment and Securities Bill. We hope it will be an act soon. And that bill is meant to strengthen our powers. It's meant to strengthen our ability to support the market in terms of new products, in terms of deepening the market, in terms of bringing in innovation that would help make our market bigger.
Great. Let's talk about something that interests me, and I know it would interest you. That's the commodities trading ecosystem, which is somewhere you also play an important role. Tell us, and of course, including mines and steel, that segment into this space is something that excites me a lot. How far have we gone?
Okay. Over the past couple of years, we have done a lot of work in that space. We set up a commodities ecosystem committee, and that committee came up with very good recommendations, and we have since begun to implement those recommendations. So in building the ecosystem, we sought to build the source of the commodities. We sought to build the storage part of it. We sought to build the market part of it. So for instance, let me start with the agricultural commodities. We all know that this government has invested a lot in agricultural production. But we thought if all this produce comes online and there's no one to buy them, there's no organized market for them, then it's a problem. So we decided to build that commodities ecosystem. We engaged, for instance, we engaged in Nigerian Standards Organization to come up with standards for these products. We have organized exchanges. We have 5 commodities exchanges now, provided them with the enabling environment, approved the rules to make sure that they can seamlessly, organize trade in these commodities. I mean, I've always seen it as a shame that we have these commodities and there's no market for price discovery. There's no market for them here. And that's what we have done now. We've created that market and we are supporting that market. But we need government support. We need support of the National Assembly. The ISB contains some provisions that would help strengthen our ability to support the commodities market.
Let me ask this question. What really is the position of SEC with regards to crowdfunding platforms? Is it about their registration or what? What really is the position?
Okay. Crowdfunding platforms have always operated in Nigeria. And we believe that they present an opportunity for SMEs, MSMEs actually, to raise funds, because the traditional exchanges are quite big, and some of these smaller companies are not able to meet the requirements for raising funds on traditional exchanges. So what we did was to come up with rules around crowdfunding, and these rules are supposed to make it easy for these companies to raise monies on the crowdfunding platforms. So, and in doing this, we asked that these crowdfunding platforms register with the SEC. This is to enable us to have oversight on these companies such that we can protect the investors who invest their monies through these crowdfunding platforms. But what we've seen is that a few of them, the rogue ones, have refused to come in to get registered. And what that means is that monies raised there have no oversight. And that means that investors who invest through those platforms take the risk of their monies disappearing. So we have sounded a note of warning to every operator of a crowdfunding platform to come in, register with the SEC so that your business becomes legitimate, so that we have oversight, so that we can protect the investor. And that's what we are saying about crowdfunding.
Great stuff. But I'm also thinking about the level of sensitization now with regards to ponzi schemes, activities of ponzi schemes. It was identified as cancer that's capable of undermining the growth and development of Nigerian capital market. Let's speak around that.
Okay, Ponzi schemes are a problem in our market. People who come to investors and promise fantastic returns that are too good to be true. And unfortunately, many Nigerians are falling for them. We have hundreds of billions of naira in complaints around Ponzi schemes. In the past, what we did was to take out newspaper adverts, to sensitize people. We continue to do that, but we've also gone into the social media channels just to let people be aware of the telltale signs. If someone comes to you with something that is too good to be true, an offer that is too good to be true, it's probably not true. If somebody tells you he can offer you 10% every month in returns, it's going to be very difficult because that's over 120% if you compound it over the year. Okay, if somebody comes to you with an offer, especially an entity that is not registered with the SEC. The SEC does not allow capital market operators that are registered with it to promise returns. So if somebody is promising you a particular amount of returns, then that person is probably lying to you. So Nigerians must know these telltale signs. And also, we've made it easy for Nigerians to know the capital market operators that are registered. If you go to the SEC website, sec.gov.ng, you can do the CMOS search. That's what we call it. Capital Market Operator Search, CMOS. Just click on it and type in the name of that company that is coming to you with an offer. And you would know whether that company is registered or it's not. And in case you have any company coming to you and promising you one amount of returns or the other, whether registered or not with us, please give us send us an email, info@sec.gov.ng. And it's just that easy. We will reach out to you. We'll try to find out what's going on. We must work together to fight Ponzi schemes, because what they do is to deprive people of their hard-earned monies and also scare people away from the capital market.
Looking at what's been happening with the price of aviation fuel, there is no doubt that there is fire on the mountain in Nigeria's aviation industry, as airline travels at the moment are groaning over what they call exorbitant fares being charged by airlines and operators in the country. Yes, in the last 1 week, most fares on local and international roads have doubled and tripled in some cases, leaving the passengers bearing the brunt of perennial increase in air tickets. While airline operators are calling on the government to swiftly intervene to avert a total collapse of the sector. It's interesting to know that the ongoing crisis in the aviation industry began late February, has been exacerbated by the crash of the naira, hiking the cost of aviation fuel, which now sells for more than 800 naira per litre, amongst other industry concerns. So far worsened the battle. Joining me live in the studio to look at all of this is the managing partner, Agro Aviation Support Services Limited, Mr. Tayo Ojuri. Mr. Tayo, thank you so much for your time. It's good to have you in the studio. At least you're live. We're not having to connect and having all of these issues. Yes, you saw that almost threw me off the stage. But let's go on with this very important discussion. What is the true picture of things now? I hear if I'm to go to Abuja and return now, I might be spending close to 200,000. That's a lot of money.
That's the reality, unfortunately. And aviation basically is a function of disposable income. And if you look at the basic salary of $30,000, sorry, 30,000 naira. Everything in aviation is dollarized. Yeah. So a basic salary of 30,000 naira, you'd realize that not many people can travel. And with this increase in the end of second to third quarter of 2022, you find that this actually has significantly negatively impacted the budgets of most of the people that are traveling. So that's actually you've seen numbers of these travelers actually reduced over the last few weeks. And so what's going to happen, or what's happening or why is this? Let's find out what is causing this actually. It's foreign exchange, Forex. The airlines, both international and the domestic, are unable to get the dollar appropriated for training, for spare parts, and increase of return of their fleets from service and maintenance. So when we don't have appropriate fleets in country, it affects that the cost. And let's now bring to the forefront of the cost of Jet A1, which you had actually alluded to in your introduction. Yes, that's actually, as at end of last week, that has become about 904 naira per litre in Lagos. So when we are looking at 904, that actually, with our high cost of Jet A1, it affects or is affecting the price of tickets. And you find out that it's actually not going to let the domestic airlines break even. Because by the time you look at the cost of your fueling, which is about 40 to 50% of your operational costs, you look at other ancillary and overhead costs, you find out that the cost of the airline tickets can only go higher. And that's just on the domestic side. On the international side, we're grappling with the challenges of international airlines not able to repatriate their funds.
Yeah, Emirates pulled out.
They're pulling out on the 1st of September. So with that, they've reduced their flight though from 2 to 1, and they've stopped at Abuja from 21 frequency to 7. So how's that going to affect us in the aviation sector?
Yes,
when you actually look at through that connect and that pinpoint, you find out that about 30 to 60% of international flights contribute to domestic markets. So when you are having that reduction or people not able to travel through the international flight, is affecting the domestic. So we're grappling with lots of challenges within the domestic aviation sector, and that's going to affect us not just within this quarter, even to the last quarter of 2022. We're going to see challenges with ground handling companies not being a reduction of flights is going to affect their income. The fuel handlers too, the uptake in the fuel will reduce. The in-flight catering will reduce. So all that is going to might probably lead to loss of jobs, and it will diminish what aviation contributes to the GDP of Nigeria, which used to be 0.04, and it's now well below that.
So it's a two-way thing. The passengers were reduced traveling, obviously, when the fare is high. I spoke to someone, I was telling me already coming from the UK, and it's about £5,500 at the moment, and at the same time last year it was about 3,000. So I was like, let me stay back. So it would affect that way, and it would also affect the business and affect all that surrounds the aviation sector. But what's this gist about Nigerians even going to the likes of Ghana to even get tickets now? Why is it cheaper over there?
Well, it's the challenge of being able to repatriate the funds.
Managing forex.
So with the airlines not able to get the basic is the airlines sell at a NAFEX rate, at a set rate, and they've not been able to repatriate their funds. And as at the end of July, that has actually come up to, according to IATA, $464 million. And they've been able to lobby and talk to the Office of Vice President and the CBN, and they've not gotten cogent confirmation of how and when they're able to get those funds out, which is obvious because the CBN does not have the funds. And it's just the reality on ground, though. Let's be real and serious. It's not just the aviation sector. Aviation sector is the forefront, but you have the manufacturing. Sectors. You have the foreign direct investors as well that have brought funds into Nigeria for investment over the years. And after making profit and rolling over those funds, it's time to repatriate the funds, and the availability of those dollars of foreign exchange to send back, either to buy the raw materials or maintain the process, upgrade, is not there. So it's a challenge, and it's a challenge to the whole economy. So what's the solution? It's not for us to just be prophets of doom and say, okay, what's the solution? For me, within the aviation sector, I think, and even within the wider economy, it's actually diversifying that non-oil sector. For us, we're seeing, you've heard several times where people are talking about where it's a lot of aircrafts coming in full and returning empty. Yes, there's been lots of initiative of actually taking a lot of non-oil exports out of Nigeria. We just need to improve on that, from the agricultural space to the cultural space, even and just everything that needs to can be purchased and sent out to bring in more money would help us increase the foreign exchange earnings for Nigeria.
How easy is it for airlines maybe to look at aircraft that consume less aviation fuel at this time? I was looking at it, when you think about it those days, you'd be like, you're not driving the German machines,
Yes.
you're going to be driving the Japanese and all of that. Do we have anything like that? Is it possible? How cost effective is that?
That's quite interesting you're saying that. And the one good side about all this thing that's happening is it's a global phenomenon.
Yes, it is.
And with the global phenomenon, what study that's been done by McKinsey, it's a cycle. With the cycle comes the boom and the bust.
Yeah.
And now when there's a bust, now you find lots of disruptors in the system. And this is teaching us, and what we've seen, you've seen the new set of airlines that are coming in or that have started. Actually, you're not seeing all these new airlines actually bring what you call the fuel guzzlers, such as the 737s. Now you're seeing very fuel efficient fiber aircrafts, such as the Embraers, the new Embraers, the CRJs, and so these regional jets. So you've seen that all these regional jets are very fuel efficient. And that's actually been the new norm within the domestic aviation sector. So this actually is helping. The other leg, which we're going to see in years to come, which is not forefront or a front burner for Nigeria now, is the fact that we are not talking about sustainable aviation fuel at the moment. We're still talking about how to reduce the cost of the fuel, Jet A1 that we're seeing. We have a lot of the legacy airlines. Actually, even I saw one of the legacy airlines already committing to 15 million liters of sustainable aviation fuel, which is the biofuels, for years to come. And some of them are really rejigging their engines for this. Because we should understand that aviation, according to COP27, is actually one of the major carbon emitters. So we have to see what would happen in the next 24 months. So within 24 months, how are we reducing decarbonization? And fuel, the content of our Jet A1 is part of it. So are we talking about that at the moment? How are we being futuristic about changing the jet engines and reconfiguring our engines of the aircraft we're bringing in so that it's actually in compliance to decarbonization initiatives?
I'm also thinking that this would definitely affect, of course, projections for the aviation space. All the figures we've got, so maybe from the NDS, from IATA, from all of the agencies who can go on and on. Even I am sure the IMF and World Bank will definitely talk about what's going to happen with the aviation sector. What's the outlook, considering the fact that also in Africa or in Nigeria, it's a pre-election year?
It's a pre-election year. However, with disposable income, you find out the dollar is actually, it's gone up.
Yeah.
And the cost
of flying of private jets and all of that.
That's still going to happen. But how does that trickle down to the normal flying public? Are we able to increase the quantum of the flying public? Because the increase in flying public would help to move business, to move services, to move cargo, and to move all the other things that would help the economy. That's when we're going to see a positive outlook. But what we see now, like I stated earlier, aviation is a function of disposable income. How much of disposable income does the Nigerian traveling public have to actually travel? And now you're finding out that the multimodal means of transportation of road. So people find out what is the priority here. So opportunity cost is, do I pay 200,000 or do I sacrifice and see whatever it takes? With prayers and with other challenges, I travel by road. of rail is not, even due to the price of diesel.
Yeah.
Nigerian Railways Corporation, they've reduced their frequencies. So it's not just the aviation sector, it's all across the gamut of the aviation transportation sector that we're feeling these challenges. So what's the way forward?
Yes,
it's being able to see, again, increasing the non-oil sector exports so that we have the foreign exchange and we don't have maintenance here for the full major maintenance for maintenance for the maintenance of our aircraft. So that's where the challenge is. We still have to go out for training. So if it's not going to change because election is here. The focus is changing. But let's see what we can do within the next few months so that aviation, safety, security, the movement of people, seamless, convenient, and competitive, commercially viable way of moving people across Nigeria and West Africa and across internationally will be able to help us grow.
Let's wrap up on this note. I know we've had this, I've asked you this question before when we're talking about recovery.
Yes.
Then we're looking at, I think, 2024, 2025.
Yes.
With this new challenge that we face, and considering Russia and Ukraine crisis still there,
Yes.
and all of this, COVID, even in some cases, we still
Yes.
have China and all of that.
Yes.
What are you looking at? What's your outlook now? When do you think we'll have that rebound to pre-COVID terms?
Pre-2019, looking at the crystal ball now,
Honestly.
there's lots of negativity of that. And I would say, looking at the numbers and the data we've actually simulated, I would say boldly, third quarter of 2023.
Wow.
And that's even with the caveat. Third quarter because we're going through an election year. At the end of February, beginning of May, by the time we actually get the people that are elected,
Yeah.
and we don't know what the roadmap will be. So that roadmap, that policy initiative would affect the driving aviation sector. So let's say 2024 actually. First
Well,
quarter
it's a good one.
2024.
I've put that. I've noted that. I'll diarize it so that we will talk about this again some other time. I thank you so much for always being here for us. I thank you for your time. I've been speaking to managing partner at Agro Aviation Support Services Limited. He's Mr. Tayo Ujuri. Do enjoy the rest of your day.
It's always my pleasure.
Market closes negative with all share index down significantly, 1.27%. Top gainers for today, NEM Insurance PLC, FTN Cocoa, Honeywell Flour, UPL, and Benefit. Top losers, we have Boa Foods, NNFM, that's Nigerian Flour Mills, PLC, Seplat, Eternal Oil, NACO. Efyong, this is significant.
Our stock market is bleeding.
It is.
Bleeding
Indirect.
Seriously. The index 1.57 down, honestly. And you know what? Very big companies are the ones that down. I should give you names of Boa Foods, Seplat, Boa Cement, Dangote Sugar, Dangote Cement, the heavy ones. Think of Dangote Cement losing over 5% down. Boa Boa Foods almost 10%. So a combination of all of this, they have weighted down, the market very seriously. That's why the market is in the negative 1.57%. I had been saying that I expect the market to, show this character for some time to come. Indeed, we are not yet out of the woods.
Yeah.
You've heard what the aviation expert had said. So if you move away from the aviation sector and then you mirror the larger economy, you still have great negativity. The stock market is part of it, and indeed the market mirrors what goes on in the entire economy. So the market is responding, to the negative things that investors are spotting, from the economy. And so the respite we are not holding for now. Yeah.
Well, let's wrap it up on that note. Thank you so much, Fengekop. As usual, it's not really looking good. But let's see what's happening outside our shores.
Yes.
Because Asian shares are down for the 7th straight session today after a renewed spike in European energy prices, stoked fears of recession and pushed bond yields higher, while tipping the euro to a 20-year lows. European stock followed Asian equities trading pattern. Euro stock 50 futures and FTSE futures were both off around 0.2% after sliding overnight. Benchmark gas prices in European Union surged 13% overnight to a record peak, having doubled in just a month to be 14 times higher than the average of the past decade. Chinese blue chips were up 0.5%, having received only a fleeting lift from the latest policy easing. China's yuan fell to an almost 2-year low as MSCI's broadest index of Asian Pacific shares outside Japan dipped 0.9% to hit a 1-month low and has fallen every day in the past week. The Nikkei lost 1.3% after a PMI survey showed factory activity in Japan slowed to 19-month low in August amid persistent rises in raw materials and energy costs. S&P 500 futures, Nasdaq futures both edged 0.1% lower, following sharp falls on Monday when rising bond yields undermined tech shares. The Moscow exchange is set to ban the use of dollars as collateral to underwrite transactions in its latest move as Russia seeks to cut dependence on currencies of nations that have imposed sanctions on it. A statement posted on the exchange website says the new policy would come into effect next week, Monday. That's August 29th. It gave no further details. Earlier this month, the exchange, the country's largest boss, said it would limit the use of dollars as collateral to 25% from 50%. Russian authorities have voiced concerns about individual and corporate holdings of currencies that it termed unfriendly, calling for their conversations into alternatives. The United States and its allies have imposed several rounds of sanctions, including those targeting the country's largest lenders and Putin since Russian forces invaded Ukraine in February. A gas levy on German consumers meant to help utilities cover the cost of replacing Russian supplies could change as soon as this winter. Well, that's the stance of Managing Director of German gas operator Trading Hub Europe, Tuscan Frank. The Trading Hub Europe had set the charge, which will be imposed from October 1st, 2022 through March 2024 at €2.41 per kilowatt hour earlier this month. The government wants to spread the cost of levy to all customers to keep companies liquid enough to maintain an intact gas market. Russia will halt natural gas supplies to Europe for 3 days at the end of the month, according to energy giant Gazprom on Friday, piling pressure on the continent as it seeks to refuel ahead of winter. Oil prices on international market rose today as renewed concerns over tight supplies dominated market sentiments after Saudi Arabia warned that the major oil producer could cut output to correct a recent oil price decline. U.S. West Texas Intermediate crude recorded a price surge of 1.22% to hit $91.46 per barrel, registering an upward price margin of 1.02%. Bonnie Light's performance is trading in the red territory, and it's down 3.25%, selling at $118.10 per barrel. For the OPEC basket, crude dealers offer $99.66 per barrel, recording an uptick of 1.47%.